Hey traders, in today's video, we're going to look at how to break down a trading opportunity by strictly using price action. I'm going to show you a segment that talks a little bit about trading psychology, and back by request, we're going to look at some stats. So we got a jam-packed video today, so grab your water, grab your beer, your wine, your coffee, whatever you need to get through this video, and of course a pen and paper, and sit back and enjoy this week's weekend review video. All right, guys, back. Thank you once again for joining me. My name is Akil Stokes, head currency trader at www.tradeempower.com. Thank you for tuning in. If you are new and you like what you see, feel free to hit that like button, and also feel free to subscribe. That way you get alerted every time I put a video out. Now, typically this weekend review video does come out on Thursdays, but every once in a while I'll put out a random video on a Tuesday or a Sunday like this past week. And well, you don't want to miss those because they're jam-packed with information. After all, if they weren't, I wouldn't put them on YouTube. So today, or I should say this week, was a very good week. I don't know what else I can say. Between Jason and I, we just destroyed it in the syndicate. If you're a member of our syndicate program, you know exactly what I'm talking about. If you're not, just know we crushed it. And, you know, that's it. That's all. We crushed it. I want to get more. You guys know me. I don't want to sit here and talk about how good I am and how much money we made. Rather, I want to make this educational. So what I'm going to show you is a recorded segment from Wednesday's live room session, breaking down the dollar Canada strictly using price action. And it actually turned out being not one of our bigger trades of the week, but one of my favorite trades. And you guys know I like the price action trades where you really got to do your analysis and dig in deep. I like those a lot better than pattern trades. Pattern trades are kind of boring. They get filled, they hit targets, and you know, it is what it is. This one kind of makes you feel like you did something special. So check out this recorded segment from Wednesday's live room session, and then I'll be right back to talk a little bit about trading psychology. All right, dollar Canada. Question was, is this a valid ABCD pattern on the 15? All right, let's just see where we're at in dollar Canada. We did double top up here. So we're on 2618 alert right here at the $120.20. We're in a heavy bullish trend here on the 4-hour, a heavy bullish trend here on the every time frame you can think of. And where are we coming back into? You guys know I like candlesticks, right? I like reading the message that candlestick gives us. And I see this, right? I see this right here. I see the market pushes up. I see a retracement back into this level. I see a higher high, higher close. I see a pullback back into this level. I see on this pullback, really at the same level as our last pullback, what do we get right here? What type of pressure do we get right here, traders? We get some buying pressure, right? Market then shoots up. We get some selling pressure up here. And now we've retraced back into that same zone. So I put myself in a position where if we're gonna consolidate, we should come across this channel, right? We should come across to retest previous structure highs at 119.90s. Now, we could break out to the downside. That's the risk we take. But look at the risk reward we're going to have on here. Our stops only need to be below this area, because if we're right, if we get down here, we're wrong. So stops are like this. If we're looking to play this across, look at targets. Is it worth, do you guys, in your opinion, is it worth risking this to potentially gain this? Yes or no? I know it's scary. It's scary to buy into a big bearish candle. I know. right? The risk reward. You're getting 2 to 1 here. In fact, I think a little bit more than that. 2.5 to 1 risk reward here. It's worth the shot. Again, you've got the overall direction of the trend. You got price action coming to a structure level. It's worth the shot. Now the question is, how aggressive do you want to be with it? If you're on the edge, when you go down to this lower time frame, you can look for a more conservative entry. RSI is oversold. You can wait for some double bottom action down here. But if you're building a case for entry, we've got a lot here. We've got the bat pattern, which I use as my excuse for entry. We've got the bat pattern here. X to A to B. B to C, C to D. We've got structure. We've got RSI oversold. We've got some ABCD action in here. A little bit below that, so we won't even count the ABCD action. We've got Fibonacci confluence. Looks like we'll get a 1618 down there from this leg. Yep. So we've got enough to build a case. And the question is really is, Art, are you going to take the chance or not? There's no wrong or right answer. Are you going to be aggressive? Are you going to be conservative? Doesn't matter which one you are. Steve says, I would wait for a break to the downside structure and take the trend continuation. That's also an option too. If you think we're gonna continue downwards to the downside, if then thought process, right? If this level is broken, I think that's a brilliant idea, Steve. If this level is broken, we already know where we're likely to go to, right? Our next structure level is right here at 1889. So if we break below this level, we should be heading down here. So if we break this level, boom, wait for that retest of structure. Look for a shorting opportunity right there. Trade it down to the next support level. I think that's a brilliant idea. Matt says, stochastic indicator shows the trend is still a bit bearish. Do you ever consider the stochastics? No. I consider price action, right? I consider price action. Let me ask you this. What, if anything, tells you Canada is bearish? Name me one thing that tells you Canada is bearish. Because everything I see, and again, I'm not talking about, let's put the trade aside. I don't really care if this is going to be a winner or lose trade. I'm talking about just the basics of reading a price chart, the basics of structure analysis, of identifying a trend. Let's look at a 4-hour chart here. Let's look at a daily chart. What tells you Canada is bearish? We've been going straight up from July. That's the question we need to ask ourselves. From July to February, we have not broke trend once. So that's why I've never been a fan of indicators and saying, well, the MACD says it's bearish or the stochastic says it's bearish. It could be a pullback. You could have that, but it's a verbiage thing. You want to avoid by saying the trend is bearish. Say it could be showing us a potential pullback. That's fine. But the point is, nothing from even on the 15-minute chart. How do we measure structure, right? We use our higher high, our new structure high, and outside return principles. And all I see is this. Boom, boom, new structure high. Until we break this leg, even on the 15-minute chart, even on a lower time frame, until we break this previous outside return right here, we're bullish. Why? Because our last move was a new structure high. You feel me? Our last move was a new structure high. Now we're on a pullback right now. We're on an outside return, and this could be why the stochastics is measuring bearish. But you got to choose what do you want to use to identify the markets. Do you want to use an indicator that's lagging? Or do you want to use what the candlesticks are showing you? Remember that when you're using indicators, even the RSI, all indicators are lagging. Always keep that in mind. So the stochastics won't go to bullish until we're already up here, and then it's too late. The MACD went to bullish. Well, we've been bullish. But it takes a while for the MACD because it's lagging, or stochastics, whatever indicator you use. It takes a while for it to recognize that because it's again, it lags. RSI lags too, guys. They all lag. Moving averages, all indicators lag. So always keep that in mind. Now, again, if you do want to take a bearish entry, I would do what Steven did. If then thought process. If we break our previous outside return, right? New structure high, outside return, new structure high. Once the outside return is penetrated, boom, that's the first sign of a bearish rotation. Right? Our trend has been violated. Not on the higher time frames, but on our trading time frame right here, the 15-minute. Our trend has been violated. Once we identify that the trend has been violated, then we shift our thought process. Well, it's a potential bearish rotation. Technically, we don't know it's bearish until we see this, but we can anticipate it. And we can say, if we get a pullback, I'm going to try and hop on the outside return and then catch the next move down. In my opinion, that's the proper way to do it. Now, again, I'm a little biased. I don't use indicators. I strictly price action, structure analysis, and reading a price chart. I have no problem with people that use indicators. But if you're going to use indicators, just please have the knowledge, be able to identify a trend on your own first and foremost, and then use the indicators as support, right? Does that make sense? Be able to read a naked chart first, then add in the indicators to support you. Take pride in not the outcome of this trade. If it wins, you're not the greatest trader in the world. If it loses, you're not the worst trader in the world. But take pride in that you caught a level where the market is clearly showing that there's some resistance down here or some support down here. The market is clearly showing that there's a fight going on at this level. And if you can consistently choose those right levels, you're on the right path. Because guess what? Even if you're 50-50, guys, even if you're 50-50 in these battles, with a risk of this much and a reward of this much, let's even say playing it here to 618, can you be 50-50 and still be a pretty successful trader? If all you're doing is predicting the levels of where the market's going to put in the fight at, yeah, you can easily be 50-50. 1, 2.5 to 1. And you'll start to see how that risk reward really plays a key role. But we'll see. All right, so it's Wednesday afternoon now, and I just played for you the clip from our live room during Wednesday. And just wanted to update you on the dollar CAD trade because this thing was pretty awesome. We talked about in the live room. Here's the chart right here. We talked about buying it up right here. We talked about knowing the basics of technical analysis and really knowing how to read a trend and how a process as simple as that can allow you to be on the right side of the market. And you can see this thing blasted right up across hitting targets, giving me played it up towards $1.20 as we talked about this level in the live room. This is where kind of that double top was at when we went to the higher time frames, but played it up to $1.20 and banked about 60 pips on this trade. So not a bad outing. And here's the cool thing. And full disclosure, I didn't catch this second part. I knew it was there, but I have rules about my day trading and when I can execute trades on the lower platforms or lower time frames and when I can't. But for those that were able to stay with this trade. Not only did we rise up, but there was a chance to trade this right back down. And we're looking at a move like this. It's going to be a cipher pattern completion here. And this is an awesome trade. We're looking at an X to A, an A to B, a B to C, and a C to D that came right up into our 786. If I take my Fibonacci retracement tool, swing high to swing low, you can see we just nipped that 786 for a cipher pattern completion. So not only did we make 56, 60 pips on the way up, but for traders that took this as a cipher pattern completion and stopped and reversed on the way down, you made another about 30, 25 to target one, and if you use target twos, close to 40 on target two as well. So anywhere between 40 and 70, 80 pips on this trade on the way down as well, putting you in triple digits for the entire move up and the entire move down. Simple stuff, guys. If you know what you're looking for and if you're disciplined enough to follow the plan that you laid out for yourself. So just wanted to use this, a cool example. This is the second time it happened today. We had the Aussie CAD earlier that Cody hit. And it's just always fun to get those back-to-backs. It's great for building confidence, and it's an easy way to pad your bank account. All right, so I know that was a little long, but I hope that was pretty powerful, and I hope you were able to learn something from that. If not, you can always pause the tape, rewind, and watch it over and over again until it makes sense. Now, from that same live room session, and actually it came from before we saw the dollar CAD trade, I recorded another powerful segment about trading psychology, and it was really a trader that's coming through my training course, the 12-week transformation course, had this awesome back-to-back trade, and it caused me to go on a little bit of a rant about how if you're going to be a trader, you can't sit back and try to pick this opportunity and pick that opportunity and think you're going to be successful. You need to have a fully thought out plan, a plan that is outlined, that is written down. I repeat, a plan that is outlined and is written down. One more time, a plan that is outlined and is written down. And you need to follow that plan consistently, meaning every single opportunity that meets your plan, you need to take it. If you get into the habit of hunting and pecking and, well, today this one looks good, but tomorrow that one doesn't, you're taking the consistency out of it, and really you're taking the whole expectancy out of your strategy. So I went on a little bit of a rant about that. So check it out and let me know what you guys think. We also got Aussie news tonight. My Aussie positions have been stopped out. So, one hit targets. I had if you guys remember, I had a hedge position on the Aussie. I was buying the Aussie against the pound. I was buying the Aussie against the dollar. Then I was selling the Aussie against the CAD. Well, the two trades that I was buying ended up getting stopped out. The one that I was selling against the CAD ended up winning. And actually, one of our syndicate members, our 12-week transformation members, Cody, I was looking through the 12-week transformation chat this morning, and just kind of, I may not respond to everything on here, guys, but I do look through it to see what you guys are chatting about. And he caught a nice double up on that trade. So shout out to a very good trade. If you remember, we had the Aussie CAD trade. It was a 4-hour trade where we had a double top right up here. We get a double top. If you guys remember from the syndicate video, it was one of those trades where I said I wasn't really, at the time, I wasn't really too high on the trade. It was a perfect double top, RSI overbought, but it really wasn't at a structural level that I felt confident in. And when I woke up in the morning, we saw these two candles, ended up getting short, and we ended up running down about 65 pips to hit target one. So I banked about 65 pips on that yesterday. Now I was I kept the second position on this trade looking for extended targets. But for those who didn't, well, you guys can see in front of you what happened, right? Can you guys see this? Give me a yes if you can see what occurred on this chart. Yeah, look at that. For you guys that are pretty good at pattern recognition, look at this. X to A, A to B, B to C, C to D. We actually ran right into a Gartley pattern. So what one of one of our training course members did was he caught it on the way down. I think he said about 55 pips, and then looks like he caught it right back up for how much did you get on this on the way up, Cody? What, another 50 something pips? I have no idea where. I didn't trade this. I was looking for a bigger move down. Yeah, so 56 pips between both targets on the way down. So a nice, over 100 pips on a nice back-to-back. Well done, sir. Well done. Again, that comes with pattern recognition. You gotta work on that reticular activating system. And again, for you guys that are not familiar with the syndicate, it's not a signal service. But what Jason and I do is we'll make you guys aware of our trading ideas, what's on our radar. But I would think from a person that has come through this process, that has come through the educational process of learning how to trade and having a mentor and really knowing that the psychological side is the most important side of things. What I feel is the most important part of this is just seeing the grind of trading. If we go from the beginning of the year so far, we were down about 41 pips last week. We started off, between Jason and I, we started off the week really, really hot, and we ended the week really, really cold. And even this week, you can see you can just see the ups and downs of trading, the trades we took. You can see where this week start at. You can see minus 15 or plus plus 70, minus 15. Plus 25, plus 151, minus 40, plus 65, minus 153. It's just the back and forth of trading. It doesn't come easy. You just don't win. You don't just start trading and win right away and it's smooth and nice. It's horrible. It is a mental drag, guys. But it really is the big picture. It's really the 2 steps forward. Take some little step back. Try to take 2 steps more forward. Take 2 steps back, 1 step forward, 1 step back, 3 steps forward, 2 steps back. It's really a grind. And hopefully what you guys are getting out of being in the syndicate again isn't just a shortcut to see ideas. Hopefully you're not using it as just a shortcut for some trading ideas. Hopefully you're using it for educational purposes and really seeing that it's a battle day in and day out with these markets. And the ones who survive are the ones that are going to suit up every day and take part in that battle. For those that are going to, battle one day and get discouraged and take the next day off, you're going to lose. The winners are really the ones that come on, they strap up, they get beat up, they come back the next day, they strap up, and then they beat someone else up. And you never know which day is going to bring which. You never know when we go into the market which day you're going to get beat up. You never know which day is going to be your big day. That's the cool part about trading. That's why you got to show up every day, because you never know. You never know. Now, syndicate members, I hope you took note of that because I was speaking directly to you. Now, I know there's about 2,000 of you guys in the syndicate, and most of you are in there for the right reasons, but there are always a few people in there that are just in there to copy ideas and try to follow trades. And I'll be honest with you, if you try to do so because you don't know exactly how you're trading or how we're trading, and I guess you don't know exactly how you're trading either if you're following us, if you haven't been through one of our courses, you don't know all of our rules, it's going to be very hard to do so. More so, again, you want to take it as a learning experience. And as I mentioned in the video clip, this was a perfect week for that. Now, me and Jason absolutely destroyed it. We've been destroying it since the beginning of January, but it wasn't all good. We didn't just go from swing low to swing high, for lack of a better term. It really was a fight. And if you've been paying attention to the trades we've been taking and results, you'll see that. And before you is the equity curve showing just that. We've taken about 30 trades this month, about 28 trades, 29 trades between the both of us, and you can just see how these trades have been. We've started off in January, the first week, back and forth, essentially just going into a channel. And then boom, we dip into a drawdown, fight ourselves back up to break even, only to dip even lower into another drawdown. And again, it's at that point in time where a lot of traders see these trades and like, oh man, the last one lost, so I'm not going to take the next one, or I'm going to stop trading for 2 days until the market cools out and gives me more opportunity. And when you try to pick and choose those opportunities, you just lose out and you miss the winning streaks. Like you see, we hit, right after that drawdown. And again, we just want to show an example of that, just the reality of trading. It's not like a lot of these clowns you see on the internet that are saying, hey, triple your account in 1 month and this magic, system where you just click a button and you're rich. It's really not like that, guys. It really is a grind. You could be extremely profitable. You can make yourself extremely wealthy in this business. And hopefully we're showing you proof of that, but you got to do it the right way. No one said it was easy, and it's really going to take, it's really going to take strength up in your mind to do so. So want to show you that. I don't like showing statistics really because people tend to look at the stats and it's like process over outcome. People look at the stats and they only think, oh, I'm gonna work with this guy because he makes money. Where you should work with me because you want to learn how to trade, not because you want to learn how to make money. By the process of learning how to trade, you'll be put in the position to make money, but it's the process, not the outcome. And typically when traders look at the dollar figure first, that's when greed and fear seep in and you wind up making those mistakes that end up causing us to blow accounts and whatnot. I've been through it. You've been through it. Let's not beat around the bush. So anyway, thank you guys once again for joining me for my weekend review video. Hey, do me a favor. If you like what you saw, as always, hit that like button, hit that share button. If you're new and you found this informative, hit that subscribe button as well. Lastly, if you want to get more of a day-to-day feel of what I do in the markets and I post my trades and whatnot in the syndicate. I see my live room members every day. But if you're not a part of any of those services, you can always head over to my blog, www.ratiotradingmentor.com. And I try to do a recap almost every day of just how the day went, what we're up to. And there's usually some hidden lessons in there. Again, this is before I was a successful trader, before I was in trading education. This is what I did, and it was a way of journaling that didn't seem as it seemed a little more manly than journaling. I didn't write in my journal. No, I'm blogging. I'm not journaling. I'm blogging, but it is really a release for me. It's a way to clear my mind for the day and really share with you guys as well. I get a lot of positive feedback on this, which is why I've kept it up after all these years. So www.ratiotradingmentor.com. And of course, you can find us all over the Trade Empowered. You can find us all over the internet, www.tradeempowered.com. Well, thank you guys for joining me once again. Love doing these videos, and I love it because you guys love it. I will see you next week. Until then, plan your trade, trade your plan. Good luck in the markets this weekend. Stay away from the Swissy pairs.